Hello, I hope you're doing fine. I hope you are doing wonderful. I hope you're disco, and this is a gold brief. And if I have time, I really don't want to talk about the market, to tell you the truth. I will strictly talk about gold because I am a gold trader. The market is very complicated sometimes. It coupled and decoupled with different things. Let me talk about gold, my baby. All right, this is the UUP, the ETF for dollar bull. And as I stated yesterday, although the candle here was bearish, but I said if you think about it, you broke out of this bull flag and sure thing. Now you're definitely in a supply area, but as I said yesterday, you have a high reading of RSI and also a high reading of stochastic, which means, and the MACD is above the zero line, which means the dip buys will step in. So until this thing goes below 50, the dip buyers will step in. That means it's not going to melt down. It might go down, but with more buyers until it loses this thing. So we are now on this stage, the buying stage, until you lose it here. Then when you lose the RSI to 50, you will struggle. But now the dollar is not struggling. And this is the daily time frame. If you think about the weekly time frame, it's even better. Look. Also, you have the reading, the high readings for the RSI and the MACD in the weekly time frame, which definitely the buys will step in every time this bad boy going down. Okay. So I'm bullish on the dollar as long as it keeps its bullish MACD and the RSI over 50, but it needs to clear this area if it want to get me more bullish, which is the 106 in the DXY right here. It's very close, very close. And I stated before, and also tweeted it, usually when you have MACDs with the higher lows, something major happens to the dollar. It happened every time since 2014 when I checked it. Every time you have three higher lows in the MACD, something major happens in the dollar. GLD, the ETF for gold. It's definitely, as I said, cycle top, and we gapped here. This is the first gap. This is a gap, but yeah, this is the third gap. Third gap in 3 days. I like that. See, the speculators, when they leave, the exit is too small usually. Those dum-dums, they disrupt everything. When they disrupt everything, they leave in a panic. That's why, even though I participated in the last leg, I was lucky. Participated until the 4th of May. How you like that? I was really lucky. I usually miss the last leg, but I said to myself, I'm gonna stay until the last leg. I think the last leg I sold in the daytime, but GDX gave me a better look because it showed me the bull trap. So I made money with the speculators and I sold, and now I know it's going to be a cycle top. And I don't know how long would it last. I usually give it at least 21 working days because when they leave liquidation everywhere, it's too much, man. It really is too much. Let me see the Bollinger Band here because I think it closed outside. Okay, it closed outside the Bollinger Band. Usually that means continuation to the downside. That's what John Bollinger says. So once this bad thing closes outside, that means this is the new trend now, and it's going to expand downward, and you will have the bearish crossover between the 10 and 20. And this might put some pressure, but it doesn't mean a meltdown. But it's never, ever a positive thing for gold. Usually the algos, just a little algos would sell like they sold here. Just a little bit. But definitely I'm not bullish because of this Bollinger Band. I usually never ever go long when the stochastic goes below 20. It's a rule of mine. It scares me S-less. Whenever this bad boy goes below 20, bad things happen usually. So I always promise myself never to go long when this thing below 20. Look last time it happened. It dipped below 20 just for a little bit here. I think not even a day. But this one, it registered a lower number. Last time this happened, oh my God, have mercy, what happened to gold? And before that, it was brief. But this came after embedded readings here. So it was just a bounce, boom, boom, bounce. So the one before that, oh my God, look what happened here. So it's always bad. Look at that embedded reading. What happens? When stochastic go below 20, you go into liquidation mode from euphoria, the stupid money, the speculators, till panic mode. So why would I go through that? And I said before, how cycle tops happen, fast moves usually produce negative divergences, and they trap some bulls, and boom, this happened many times, all the time. As a matter of fact, every major top, these fast moves happen, and they produce negative divergence in the daily time frame. All right, same thing with SLV, except it is definitely an embedded reading. Now, look, it started going below 20 when it was here at 21.91. Now it's 21.56. So we lost all that. And it might go even further because it's embedded reading now. Supposedly, in theory, every rally would be sold right here. Okay? And plus, as I said yesterday, you trapped bulls here, and you got in this trading range, so double trapment. Oh, my own. Gosh. Okay, I'm going to talk about the market at the end. I'm going to talk about the 10-year yield and SLV in the weekly time frame. So let me talk about GDX here. Okay, GDX, see, I talked about the KISS formation. See this one I got out of GDX right here, 4th of May. See what happened here? You made a higher high and you closed in the last trading range, which made a severe negative divergence and a KISS formation here. And boom, that's what happened. Boy, oh boy, oh boy. So the same thing with GDX. Now we are below. So this is the third day to be below 20, which means embedded reading. Embedded reading. Okay. This is a low reading in GDX, which means liquidation. So liquidation, they don't come in ones. They usually come in dozens. So you will have a bounce, liquidation, like what's going on here. And what happened here. And what happened here. I don't know the future, but these are my rules. You go below 20 for over 3 days, liquidation, and every rally will be liquidated. It does not mean you're not going to have green days. It means liquidation is in service until you lose this embedded reading and you close above 20. That means short will be covering. Okay, I talked last video. Usually these type of a meltdown, I use the 195-minute time frame to have an entry like what happened last time. So I'm gonna look for the stochastic to come out of oversold with the bullish MACD, hopefully in a positive divergence, and I will hopefully catch some of this price expansion next time, and hopefully would sell with the first crossover in the stochastic in the 195 minutes time frame. So hopefully I will catch another thing. Usually you will have a kiss formation like you had here, and would be easy money I'm hoping that I will repeat my patterns. Look what happened here. You had a kiss formation right here, and boom. So you had double bullish MACD and also a bullish disco combo at that time. So I'm hoping, I truly am hoping that I will, not be fearful and believe in my analysis and buy at that time. And hopefully I would see some bullishness in TLT. I would see bullishness in GLD, SLV. I see bearishness in the dollar, and bearishness in the 30-year yield at that time. Okay, so hopefully I will be safe to get back in GDX again. And same as in GLD and SLV, GDX closed outside of the Bollinger Band, which means continuation to that downside, according to John Bollinger, the creator of this standard deviation formula, that the price action stays within 95% of the time, where the standard deviation is the 20-day moving average. You could do whatever you want with the standard deviation, but here is for the 20-day moving average. So when you close outside, it is means continuation to the new trend. Okay. All right, and also the stochastic is below 20, so nothing for me. Let me talk briefly about the market. Usually the market in the past 3 years, past many years, they have negative correlation with the bullish discount combo in the 10-year yield, and it's and they are intact now. And last time this happened, it produced havoc in the market. Every time. So nothing is coming up yet, nothing at all. So okay. Also, in weekly time frame for the stochastic only, every time the SLV goes into liquidation mode in the weekly time frame, and gets down in, okay, this is the thing, gets down in stochastic, gets down to 80 in the weekly time frame, below 80, sorry, a correction takes place in the market every time. There's no correction right now. Every time. And also the same thing with negative correlation with the 10-year yield. I'm not one of these guys that are upset with the market and conspiracy theory and all this stuff. I am a chartist, and if I say I'm selling, I'm using zero motions in the chart, and sometimes repetitive patterns, and this is a repetitive pattern with the stochastic going down from 80 to below 80 in the weekly time frame, and this is a repetitive pattern with the bullish discount combo. There's a negative correlation between the 10-year yield and the stock market as a whole. I am not looking for conspiracy theory. I'm not crying out of spilled milk. I'm not that guy. I'm just doing this stuff. That's why I love trading gold. Gold is the most beautiful thing a trader will ask for. It's the best currency. It usually play by the book, but with exception, very few exceptions, when the speculators come in the market and they make some disruption, but they usually don't stay for long, and they usually liquidate, and the exit's too small. So it's for the bravest of the brave. Gold is Gold, I love gold. I love gold. Another thing I love about gold, also you have negative correlations, positive correlations, usually with some assets like TLT, like the USD/JPY, and the USD/JPY is breaking out. Okay, it's breaking out now. This is not updated. It's breaking out in the daily time frame, and bullish discount combo in the daily time frame. Also breaking out in the weekly time frame with bullish discount combo. So the havoc will stay in for gold for some times until maybe the stochastic in the weekly time frame gets over 80 and comes back in like this here, like what happened in October 2022, like what happened in July. You remember 25th of July when GDX rally, 2022. See what I'm talking about? 10th of Jan, beautiful rally in Newmont. I did ride these rallies, so I remember them. Oh, Maron. Oh, Newmont had a beautiful rally in late November 2021. Well, this one, no. This one, Newmont was going through meltdown, and GDX as well. Late rally right here in 2021. Definitely some negative correlations. 100%. I'm not joking. That's why I love gold. I really love gold. I love trading gold. It is my safe haven. It is my baby. I only trust myself when I trade gold. I don't like to trade the market that much because of these decoupling now with the dollar, decoupling with the 10-year yield, and I would look stupid being bearish in the market, but I don't. I'm not stupid being bearish in gold. I love you guys. Please like if you like, share, subscribe, and do remember, this goes for